Okay, everyone, we're going to get started with the stock market technical analysis. If you're new, this channel is all about technical analysis. We use what we see in the charts to tell us where the stocks and the markets might go. Again, nothing's guaranteed. It's all just based against probabilities, and managing risk reward is key to successful trading. So the bottom line is I'm not going to get everything right. I'm going to get some things right. I'm going to get some things wrong. Risk management, taking trades that have a favorable risk-reward ratio, those are keys to success. So it's not about getting 100% of every call right. I try to get every call right, obviously, and I use the charts to tell me. But, we do need to manage our risk. We need to, take favorable risk-reward ratio trades, and that's what I try to point out. So we're going to start out today with Amazon and look at some of these FANG stocks. I don't see a whole lot of change in the indices. Again, we're grinding sideways in the markets. Very tight price compression. So we're really, the range of the trading the last couple of weeks has been extremely narrow. And so there's just not a lot going on. We just need to wait for some sort of a catalyst or some sort of movement before we can take action on some of those indice trades. Looking here, though, we'll start off with Amazon. You see on the daily chart, again, Amazon had a false breakout or a bear trap. So I have circled this target where I think Amazon is heading, 2,927, possibly even lower. And I'll point that out here in a second. But the thing is, on Amazon, you had this big sideways range, really going back about a year's worth of time on this daily chart where Amazon just really went nowhere, just went sideways. Recently, we broke out to the upside, but that failed on earnings, and we actually gapped down back within that range. So that is a false breakout or a bear trap. Again, it was priced into the charts with the big negative divergence that we've had on Amazon this whole year. Each new high that it made, it was a divergent high. And this one, including this breakout, it occurred with a divergent high, meaning that you had lower momentum, downtrending momentum on that breakout. Again, if these concepts are new or foreign to you, I put together a stock market technical analysis course, link in the description below. I priced it at $99, and it's about 4 or 5 hours of instruction going through all these concepts in detail. Check that out if you haven't done so already. So the point is, on Amazon, we broke back within the range. We had a false breakout or a bull trap. So that really sets us up for a move down back to the bottom of the range. And you can see today, when they gapped down, they held this area for almost 2 weeks, but we're starting to break the lows now today and sell off. So look for more weakness here in Amazon. And I would expect if we're going to see weakness in Amazon, we're likely going to see weakness in some of these other FANG stocks and the broader tech sector as well. So that's what I'm looking for. We're seeing weakness in Amazon today. I'm looking for that to continue. Now, we could trade all the way down. If you look at the weekly chart on Amazon, this is really going back to the 2009 lows. Give me a second. This should snap back. Not sure how that got moved. There it is right there. The 2009 lows right there on the weekly, we held support right there and held support there. So we have 3 tags of that trend line, which helps validate the trend line. Again, the more reactions on the trend line, the better. We have 3 though, and that's a minimum to establish a trend line. So if we break to the bottom, we could run down and hit this. We could run down and hit this trend line. And from where we're at right now, if we do that, that would be a move of another, say, 18 to 20%. I wouldn't expect Amazon to fall 20% without the market really coming down quite a bit as well. So it just has such a heavy weighting in the market that it's going to drag down. It will drag down the rest of the markets most likely. Okay, while Amazon is starting to sell off, some of these other ones are just barely hanging in there, such as Google. So you can see here I've circled this area that we just made this most recent high right here was a divergent high. So you see the negative divergence right there, and we made a new high in price. We're also outside of this price channel, this upward price channel. When you're on the outside of that, usually that's kind of the no bueno zone where you're basically going to sell off or likely to sell off, especially if you have negative divergence, which we do. So you can see really this is going on about 2 weeks. We've just held that support line, really tight price compression, just grinding along this trend line. All it's going to take is one catalyst. Likely it's going to come in the form of a gap down. They're probably going to gap this thing down, and it's going to run to the bottom of the price channel. That's what I see right now. The reason why I assume that's going to happen is the negative divergence there tells me we're going to break. We just got to see it. Need to see that break of that trend line. Until then, we're just grinding along this kind of grinding higher on pretty low volume. So that's what I see there. Nothing, no new change there in Google. And same with Apple. Apple has gone sideways since mid-July. So almost 2 months now we've gone sideways. This new high that we made is a breakout above the former high, which came back here on January of 2021. We broke out, but that breakout occurred with negative divergence. So there it is. You see the negative divergence. See the lower high in momentum than the former high. So there's your former high in price. There's your former high in momentum. Here's your new high in price with a lower high in momentum. That's negative divergence, and you can see what's happened since. We broke out, and it's just gone nowhere. So I'm assuming we're going to, I think we're going to fail and break back down. And if that happens, that would be a bull trap or a false breakout. And I'd look for a move at least at a minimum down to this 129, 130 area, this kind of daily trendline support right there. That would be the next level of support on Apple if we break down. So I'm watching for it. Again, nothing is going on. We just look at the price compression. See how it's just these little candles and we're just going nowhere. We're just opening and closing right in the same range. Really tight range. There's no trading opportunities right now in these FANG stocks. So we're just waiting for the next major move. And Microsoft, Microsoft basically has gone sideways as well. Microsoft did have an upward trend line right here on the daily chart. We have negative divergence, big negative divergence. It's a common theme across a lot of these tech stocks that we have negative divergence because they're extended. They're overextended to the upside. Doesn't mean that they can't continue to extend, but it just means that as they get more and more overextended, the divergences build until they break. And when they break, you get a big correction. So rather than be long something that is grinding higher, I'd rather wait for those to break and catch that move to the downside, which should be impulsive and should be a pretty good size move. And that's really what I'd rather wait for because nobody knows when that's going to happen. And so rather than get caught off guard, I'd rather just wait for the opportunity to the downside, which should show up. But again, price compression, we're going nowhere. Looking for that Amazon, Google. Once they'll start breaking, I think we'll start to see the rest of these start to break as well. Okay, let's take a look at the financials. So the financials, we had this bearish rising wedge right here on the daily chart. We broke. That was our sell signal back here on the financials. So, that's where I shorted the financials. They sold down to kind of the first level of support right in here. And they, I was taking profit at those support levels in many of these financials. We then bounced and kind of chopped around. We made a new low right here, and I had it circled. I've talked about this. That was a bullish low, a divergent low. So there's your bullish divergence on the financials. So one thing to note, that bullish divergence was kind of indicating we were going to get a rally. And there it is. There's your rally in the financials. Now we have made a new high in the XLF. And this new high has come on lower momentum. So as of right now, so there's the momentum. There's kind of your former highs right in there and lower high there. So we have negative divergence as of right now on the financials. One thing to point out is not confirmed yet. So see how let me get rid of this. See how the PPO is just pointed straight up. You need to see that confirmed by turning back down. That would confirm the divergence. So wait for that. That's something that I would really like to wait for. Once we get confirmation, same with the RSI. See how let me zoom in here. See how we're pointed up? You want to see that start to turn down to confirm that negative divergence. Once we see that negative divergence show up, we're going to go to the hourly chart and look for the next breakdown. And as of right now, I've got kind of this small uptrend right here on XLF. So when we see the negative divergence show up, we're going to look for a breakdown of the hourly chart. And that actually should set us up for the next leg lower in the financials, which I believe will undercut the recent lows probably head us down all the way down to this 3160, 3170 area. Most likely this is going to come with a broad-based sell-off and a break in tech stocks and kind of just a break in everything. But it doesn't have to. We could just see the financials sell off independently of the market. So things to look for there. Financials, as of right now, are bullish because you have bullish price action, but you do have negative divergence. Once we start to confirm that, this is going to start to turn more bearish, and we're going to look for a breakdown. Industrials are starting to turn up. I suspect they're going to make a new high here in the industrials, pop above these recent highs, somewhere up in here, and then keep that negative divergence. So as of right now, prices pointed up, momentum starting to turn up. I think we probably can go a little higher in these to put in that negative divergence. Then we're going to start to look for a breakdown here. So not much upside, but potentially another 2 to 3% or so in the XLI, the industrial sector, and then we'll look for signs of a breakdown on that one. Okay, let's flip over to gold because that's really been the area that I've been focused on this week, just with the big move on Sunday. So gold, we'll look here at gold bullion. You can see we're bouncing today in gold bullion. We do have bullish divergence on bullion on the PPO. You can see here this most recent move here. Now, not completely confirmed. You want to see that PPO start to turn up. But the downward price, the new low right all in here, was a higher low in momentum. So than your former low, which was right there. So bullish divergence on the PPO, although not confirmed. And then on the RSI, don't really have it on the RSI. So kind of mixed there on the RSI. Meaning you can see we recently made a new lower low than the former low right there. And going back to price, made a new lower low in price. So mixed signals on the indicators for bullion. We'll see how that kind of plays out. We did have bullish divergence going all the way back to this low. So I have it circled back here. These two lows right here, you can see made lows right there in the momentum, and yet the former low, when we spiked down on Sunday, we made an equal low, and it was basically on equal momentum. So it is technically a bullish divergence, although, just barely. Let's just put it that way. Now, looking at some of these miners, though, they're starting to turn up. The RSI on these are starting to turn up. So as I zoom in here on AEM, you can see starting to turn up here. And I had it marked out from yesterday, but there it is. See it starting to turn up. So that's confirming that bullish divergence. What does that mean? Well, that means that we made a new lower low in price right here. I have it circled on higher momentum. That's bullish divergence. That tells me that there's buyers in here, and it's actually an area of accumulation. So it's bullish. Technically, it's bullish. The momentum is leading price to the upside. And so you want to look for price to start to move to the upside as well. But again, bullish divergence can be extended. So we could continue to kind of put in bullish divergence and then break. So we're going to want to look for signs of resistance, breaking resistance. So we'll go to the GDX for that one. Looking at the GDX, you can see here, I have it circled from yesterday, but this was a new low in price, but we're starting to confirm on the RSI. See the higher low in the RSI? And same with the PPO right there. So you can see right there, made a higher low in momentum and a lower low in price. That's bullish divergence. I suspect we're probably going to rally or go sideways a little bit. We might dip down and make a new low and hit this support about 31.30. So there is the potential to kind of consolidate here, let the RSI kind of creep up, let the PPO creep up, then run down, make a new low, another divergent low, keep the bullish divergence, running into major support, which would be about that 31.30 area right in here, and then that would be all there would be to the downside, and then we'll start looking for upside. But in general, I'm bullish on these. I've been adding to some of these miners as they've been hitting their support lines. I'm not adding anything today, but if we get kind of slightly new lower lows in price while keeping the bullish divergence, I'm likely to add a little bit more. And you can see same with NEM, Newmont Mining. We hit that support line. I suspected this is what they were going to do, but let me get rid of this. Yesterday, they broke it below, closing below that trend line, and I talked about in the video where I think tomorrow they'll just recover it, and there it is. There's the recovery. So that is a new lower low in price right in here with a higher low in momentum. Bullish divergence. That's telling you that there's likely going to be an uptrend very soon in these, and this is the opportunity that I see to buy these things. Again, I don't want to buy Newmont Mining after it rips higher and then everybody's piling in. I want to buy it down here where it's showing signs that the smart money's buying, the bullish divergence is there, and we're accumulating while right before that move to the upside. Okay, so that's what I see on that one. Again, everything in this channel is just my opinion. And then another one I've been keying in on, Harmony Mining. Again, bullish divergence. There it is on the RSI, starting to turn up. So that means this was a new lower low in price with a higher low in momentum, at least on the RSI. And the PPO is still higher than the former low. So bullish divergence on this one. The support on this is still a little bit lower. So maybe we want to come down to this 335 area, tag that. I don't know, but I suspect they're going to consolidate this for a little while. And then if it's going to dip down and make one final lower low in price while keeping the divergence, that could be possible. So things to look for. But again, this looks like the area where the buyers are starting to accumulate these things, especially after that big sell-off. I think there's buyers here. At least that's what the momentum's telling me. So bullish on these still look good to me. And just to go on a side note, the CPI reading came in today and it was not as hot as expected. One thing you need to understand is there's a game that Wall Street plays with expectations. A lot of the time, if they want a market to move, they'll set their expectations in a certain way that they know the data is going to either beat or disappoint. So expectations are a made up thing. It's not hard data. It's what some analyst is expecting. Well, oftentimes the analysts are expecting what Wall Street wants them to expect so that they can move a market a certain way. So again, the expectations came in a little bit less inflation than the expectations. The market sees that as, putting the Fed on hold for hiking. So it's just games they're playing right now where I think ultimately what happened is the Fed is trying to talk down this inflation trade a little bit so that it doesn't get too overheated and too out of hand without having to actually raise interest rates. So they talk it down through, faking that they're going to raise interest rates. The market kind of, takes note. We start to see financials rally. We see gold sell off. We see interest rates rise a little bit. And then inflation comes in a little lighter than they expected, and that gives them cover to keep pumping money and not have to raise rates. So again, until you see action, I would expect that the inflation trade is going to be intact, that miners will continue to rise, dollar's going to continue to fall, and we're going to see interest rates actually continue to fall, basically, because the Fed's in there, keeping those low. Until the Fed actually does an interest rate hike, everything's talk, and I would just look at it any kind of counter trend moves against that inflation trade, to me seems like, just seems like vibrations within the market, gyrations, where the larger trend should be that inflation trade continuing until you see interest rates being hiked by the Fed. Okay, Target. I'm really focused on this one because I think this is a really good short setup, although not actionable yet. So I'm not shorting this yet, but definitely a good setup. So you have this clear upward trend in Target coming off the March 2020 lows right there. We broke trend and it created, there's a clean breakdown. And this is the kind of sell signal I'm expecting to see show up here pretty soon. But then it created this secondary uptrend here, and it's just been on autopilot, basically. These tiny little candles each and every day grinding higher. Okay, so now that we're up here, I'm focused on the down move. We have big negative divergence that's been building for quite some time now. And even most recently, you have negative divergence right there on the RSI and the PPO, where momentum is dropping off while prices continue to kind of grind higher. So again, there's bag holders in here buying this, saying the trend is your friend until the end, but they're going to find out that the end of the trend means that they give back a lot of profit or maybe, go into losses. It depends on when they bought this thing. But we have this trend line to watch right here with the negative divergence. We have earnings coming up. I believe they're coming up. They're estimated to come up on the 18th. And we're looking for, I don't know, this is trading into earnings. So if it breaks down right before earnings, I would suspect that they'll probably break it down and then earnings will come up and they'll pop it up into a back test. So I wouldn't want to, if you're going to short it on the initial breakdown, I'd probably cover that short before earnings. And then if you get the back test into earnings, you could reshort it on that back test. That's how I'd look to trade this thing. But we'll see what happens, So if you start to get a sell signal, you could take that trade, but that should be a short-term trade in my opinion, and then wait for earnings to come out and then reshort it on the back test if you get that. Snap here. Again, Snap is trading up at these all-time new highs right up here where it gapped up after earnings, but it's gone nowhere ever since. It's just chopping around. So it is trading at a new higher high, but with much lower momentum. So you have negative divergence. And again, until you see some sort of indication that this is going to break out, I suspect we're going to get an island cluster top. I think we're going to gap down on this thing, and this is going to be the island cluster top, and then we're going to get a move down. That's what I see, unless the divergences are burned through or we get some sort of price action starting to ramp higher. That's what I think is going to happen on that one. Okay, I don't have too much else going on. Starbucks continuing to sell off. Everything. All these other trades continue to look decent, and so I'm just sticking with most of them that I've pointed out. And yeah, that's kind of where we're at. So again, I'm looking to reshort some of these financials here pretty soon. A lot of those I covered. A lot of them had bullish divergences that I pointed out in the past that gave me pause on, continuing it with the short trade. So I was covering a lot of those, taking profit, talked about that during that time. And looking to reshort them here pretty soon. So, and then obviously that target short is a good setup. Gold miners still look good for the long side, and we're just waiting for this market to resolve. Really tight compression, kind of a stale market right now. So out of these periods of low volatility come high volatility. So we just have to wait for that. Guys, if you find value in the video, drop me a thumbs up on your way out. I do appreciate that. It does help the channel. And I'll continue trying to put in the work, finding the trades. So thanks. Catch you on the next one.